To everybody this morning. I guess this afternoon now, isn't it? I'm very pleased to provide a briefing on Budget 2020. This briefing will include Q3 fiscal update for the current fiscal year that we're in, the fiscal year that we presented in Budget 2019. So Budget 2020 is about getting Alberta back to work, getting our spending under control, getting services to people, to Albertans who need them, and getting a fair deal within Confederation. I want to take you through our key fiscal metrics. If there's any accountants in the room, you're going to be interested in this chart. It's really only been 9 months since we've taken office. Of course, we presented Budget 2019 only a few months ago, and that budget laid out a complete four-year fiscal plan, a fiscal plan that would bring this province to balance within our first term, by year 4. And I can tell you this, that we're on track with that plan. Our Q3 update, our Q3 projections for the year ended March 31st, 2020 would indicate that we're headed for a lower deficit to the tune of $1.2 billion relative to that of what we projected back in Budget 2019. And so that's good news. That's, that better financial result has been provided by higher investment income. It has also been the result of lower expenses on a couple of areas. And so at the end of the day, we're looking at a $1.2 billion improved outcome for the current fiscal year that we're in today. I want to move on to Budget 2020 and the remaining 3 years in our fiscal plan. We're continuing with the basic trajectory that we presented in Budget 2019, and it's a trajectory, again, that leads us to a balanced budget in year 4. Our balanced budget that we're projecting in year 4 is a $700 million surplus, and that also includes a $450 million revenue forecast allowance. And if you recall, that was one of the McKinnon panel recommendations, that given Alberta's significant volatility in revenues, we should be incorporating an allowance, a revenue forecast allowance, and so we've done that in year 4. The other point I want to make on this fiscal chart is that we're also including a $750 million contingency every year. And again, that was a McKinnon panel recommendation, and I believe it was a wise recommendation. We certainly have incorporated that into our 4-year fiscal plan. With respect to the current year that we're in, it was important that we had that $750 million contingency, or that significant contingency, because in this last year, we've had an extremely vibrant forest fire season in the north. We've had a very tough year in agriculture with a late spring and early fall in many regions. And as a result of that, we're expecting to have a $1.2 billion disaster and emergency relief spending effort in the current year. So again, our results, which are an improvement of $1.2 billion relative to the net position we forecasted for the current year, actually do incorporate that $1.2 billion in disaster and emergency spending. I'm going to take a look on the next slide, on the next chart, at revenues. And this is a line-by-line revenue projection for the fiscal plan. And you'll note that we're projecting revenues to stay flat for the upcoming year, for Budget 2020. We're expecting that income tax revenues will grow modestly, but we're actually projecting that resource revenue royalties will come down. And that's due to a widening differential, due to oil being priced based on rail economics as opposed to pipe economics. I think we're taking a very cautious approach with this projection, but I believe it's credible as we see more and more product being moved out by rail while we wait for additional pipeline capacity to come on stream. In the out years, in year 3 and year 4, we're projecting revenues to increase by approximately $4 billion in each of those years. And something to point out, bitumen royalties actually don't exceed the current year that we're in until year 4. So in spite of the fact that we are projecting an increase in revenues, as I take a look at those revenue lines, line by line, we are not predicting a boom time in the next 2 years. These projections, I believe, are credible, but they're cautious. Now, we have to put that in terms of the volatility we see in the markets today, and the volatility is extreme, given the global uncertainty, particularly around the coronavirus. All of that volatility, again, points to the fact that as Albertans, we need to manage what we can manage well. And that's why Budget 2020 continues to focus on improving our business environment, ensuring that Alberta has the most competitive business environment possible to attract investment and create economic growth. And secondly, Budget 2020 continues to ensure that we manage our spending responsibly. And that means, in time, bringing spending in line with that of comparator provinces on a per capita basis. Budget 2020 takes that direction. If we take a look at the next chart, and this chart is basically a transparent look at where our revenue volatility and revenue risk lies. The shaded area is basically plausible revenue scenarios. The blue dotted line represents our basic assumptions for revenue projections for Budget 2020. The black dotted line represents where we would be if we see no additional pipeline access or energy egress from the province. So as you'll note in the chart, we are probably a third of the way up from the bottom. In other words, realistically, there would be more upside potential in terms of revenues than downside under realistic expectations. But if we don't achieve additional energy egress, I was clear in Budget 2019, and I'll restate it today, additional spending restraint will be required. I want to talk a bit about energy egress, though, because quite frankly, while we do see blockades across the country, and disappointingly, a very slow response to enforce the rule of law, and some of these blockades are negatively affecting the economy of the province and the country. In spite of that, I do remain more hopeful today that we will actually see additional energy egress than I've been for some time. We've seen a number of court decisions that have fallen in the favor of the province and the energy industry, and let me say in the favor of Canadians. We're expecting that Enbridge Line 3 project will move forward and get completed. We see progress on Trans Mountain, and that's encouraging. And we're encouraged that TC Energy is now talking about getting going on Keystone XL again. On top of that, with existing pipelines that are already in the ground, midstream companies have plans to optimize production through those pipelines. And so currently, by the end of 2021, there's expectation that there could be an additional 300,000 barrels a day additional egress from existing pipelines in the ground. So again, I find I've been encouraged with that news. However, we will not celebrate on additional egress until we actually see oil flowing through those lines. I want to talk a little bit about our approach to jobs. Really, we're titling this budget a blueprint for jobs. We recognize that our unemployment rate remains stubbornly high in this province. We continue to have unemployment at over 7%. And while we've had a jobs focus from day one as a government, we will be putting even a finer focus on job creation going forward. We will continue to take the broad-based approach of ensuring that we have the most competitive business environment possible, because we know this, that it's really the private sector, it's individuals and businesses that invest in the province and create long-term job opportunities for Albertans. So we will continue to move forward with our job creation tax cut. We will continue to look to modernize our regulatory environment and reduce red tape. We have a goal of reducing it by a third. We've started. We have a lot of work to do yet. We're committed to get there. We will continue to invest in infrastructure. And as you recall, in the last 10 years, our capital spend has been approximately $7 billion a year. We are turning that down based on, again, McKinnon panel recommendations. In Budget 2019, we turned it down to an average of $6.2 billion over the 4-year fiscal plan. That's crept up slightly to $6.4 billion on average over the remaining 3 years of the fiscal plan. So we will continue to build key capital projects. We will also be focusing on ensuring that young Albertans, and in fact all Albertans, have the skills they need to find a place in the modern economy. And so we have our advanced education ministry is working at revamping the funding formula for post-secondary institutions to ensure that those institutions, in fact, are offering programs that will really provide Albertans with credible job opportunities as they graduate. We will also be working hard to promote Alberta to the rest of the world. We believe we have a very good news story here in this province. We will be working hard to position Alberta in an accurate light to global investors and attract additional investment into the province. With respect to the capital plan, we will continue with our municipal funding plan, similar to what we laid out in Budget 2019. We will be building health facilities, roads and bridges, schools as required. We'll be building social supports and housing, and of course there'll be additions to post-secondary institutions. We will also, as part of our jobs plan, we're taking a look at key infrastructure projects, largely transportation projects, that are in the capital plan or perhaps just outside the four-year fiscal plan, but projects that will improve our productivity, projects that will improve our competitiveness, projects that are likely, when complete, will attract additional investment. And we're looking at moving some of those projects forward. So we can not only get additional job creation on the build of some of those projects, but we actually see additional investment into this province earlier because we've de-bottlenecked a transportation route. One of those announcements was the twinning of Highway 40 up in Grand Prairie last week. Highway 40 has been a highway that, it's quite a young highway, but given the amount of investment into the Montney and Duvernay fields up there, there's simply been a lack of capacity, and it's been actually a drag on investment. Moreover, it's been a huge public safety issue up there. It's been a highway that has that's been double in terms of incident rate and fatality rate relative to other highways. So we were very pleased to pull that project forward and announce funding. I have to say this as well. I have to give credit to the municipalities up there. The MD of Greenview and the County of Grand Prairie are cost-sharing that project with the province. And so this is going to be a win-win-win, not only for that region, but for the province as a whole, as we will see additional investment into that region because of this infrastructure. We'll be looking for additional projects like that across the province, projects that we can move forward and create more fiscal capacity in the province as a whole. I want to announce a few other capital projects in the capital plan. These include renovations to the Peter Lougheed Centre. They include hospital equipment for the Alberta Surgical Initiative. They include a rural health facilities revitalization program. They include the Red Deer Regional Hospital renewal, which was announced, I believe, yesterday morning. And again, they also will include additional transportation announcements, so stay tuned for those. I want to draw our attention to healthcare really briefly. We will continue to fund healthcare at over $20 billion per year. Hear this. We are maintaining healthcare funding in this province. But more than that, we are looking to improve the way healthcare is delivered. Minister Chandro released the Alberta Health Services report, which Ernst & Young provided a number of key recommendations where we can find efficiencies in the way we deliver healthcare to Albertans. In fact, those efficiencies outlined a total cost saving of between $1.5 and $1.9 billion. I will say this, for every efficiency and for every cost saving achieved, those dollars stay in our healthcare system. Those dollars will go to frontline healthcare delivery in this province. We will continue to fund ongoing commitments from Budget 2019. We will continue to fund $100 million for mental health and addiction strategy, $40 million for the opioid response, and $20 million for palliative care. In Budget 2019, we announced that we would create 4,000 publicly funded addiction and mental health treatment spaces. We believe that we share Albertans' values on this front, that we don't want to leave anybody in a place of despair and addiction. And we believe the right approach forward is to create treatment spaces for them. And so I can say this, we're well on our way to getting there. There's been a recent announcement for 900 spaces at Poundmakers Lodge treatment centers, and I understand there are another 2,200 spaces in other parts of the province, and announcements yet to come. And so we're moving forward on that initiative. On education, we'll continue to maintain education funding. But again, more importantly, our education minister has just rolled out a new funding formula. That funding formula will ultimately result in more resources getting right into the front lines of the classroom. So this is an important initiative. Again, we are maintaining education funding. There will be no cuts to education. On the social services ministries, again, funding has been maintained or has grown in our social services ministries. Children's Services is on track for a full 15% increase, as we laid out in Budget 2019. And we continue along that plan for Children's Services. Since taking office, Community and Social Services has received a 7.6% increase in funding. Again, we recognize there's great caseload pressure in Community and Social Services, and they have seen an increase. Seniors and housing funding will be maintained. But again, as important, or perhaps more important, there will be ongoing program evaluation to ensure that Alberta taxpayers are receiving full value for their tax dollars, and also to ensure that vulnerable Albertans receive the supports that they need. I want to turn our attention to the public sector. 55% of our operating budget is public sector salaries and benefits. The McKinnon panel was clear in their report that Alberta is an outlier in terms of our remuneration levels and our total costs for public sector relative on a per capita basis. And their recommendation was that over time we bring our per capita costs and bring our public sector remuneration costs down to be in line with other provinces. We were very transparent in Budget 2019. That was our plan, and we haven't moved off that plan. We will work with our public sector partners on ensuring that we have a sustainable public sector going forward, and that we can continue to deliver high-quality services for this generation and the next. So we have a plan to reduce our public sector costs by just over 2% over the 4 years. And there will be a reduction in some departments for public sector positions. The vast majority of these reductions will come as a result of attrition, as folks find other job opportunities or perhaps move into retirement. I want to talk just very briefly and really lastly on a fair deal for Alberta. Over the last 25 years, Alberta's made a net fiscal contribution to the nation of over $400 billion. That's a very significant net contribution. There's not a province that's come close to us in the last 25 years, in the last 10 years, or even in the last 5 years, as we've continued to make net fiscal contributions of close to $20 billion a year, even during our time of economic challenge in the province. Right now, there's an unrest in Alberta. There are a lot of frustrated Albertans out there because they see that we have a federal government who's enacted policies that are not in the best interests of this province, certainly not in the best interests of the Alberta economy, and I would suggest not in the best interests of the economy as a nation. And so the frustration level is high, and I share that frustration because while we've made such significant contributions to the Confederation as a whole, at the same time we have a federal government that's implemented policies that are really contrary to the economic interests of this province and this country. And so, as most of you know, we have requested changes to the fiscal stabilization program. That's a federal fiscal program that is supposed to respond to provinces when they experience a large shock in revenues. And in 2015-16 and the subsequent year, we experienced a $7 billion reduction in revenues. But because of an archaic $60 per capita cap, we only received $500 million, when in fact we should have received $2.9 billion without the cap. So we have requested that the caps be removed and that the federal government apply a retroactive approach that would result in a $2.4 billion payment back to Alberta for the fiscal stabilization program. For the 5-year period that we're asking them to apply this retroactivity, during that time, Alberta made a $100 billion net fiscal contribution to the country. So a $2.4 billion adjustment, in my view, is a pretty modest request. It's hard to have this discussion without talking about equalization, because that's really at the core as well of many at much of the frustration that Albertans feel. Right now, we continue to make great net fiscal contributions. We have an equalization program that's continuing to grow at the same time that fiscal disparities across the country are narrowing. We need to see some changes in equalization. We need to we have a long-standing position, and we maintain that position, that non-renewable resource revenue should not be included in equalization calculations. And the formula needs to change so the program does not keep growing while fiscal disparities narrow within the country. Ultimately, at the end of the day, we need an equalization program that provides no disincentive for provinces to fully develop their resources and take full responsibility for their economic policy decisions. As you know, the Premier appointed a fair deal panel who's hearing from Albertans on a number of issues that could potentially put Alberta in the driver's seat, or certainly more so in the driver's seat relative to its future. And so we'll be looking forward to the report from the fair deal panel. We're expecting it by March 31st, so stay tuned for that. I want to close with this. I'm very pleased to be able to stand up in front of you today and say we're on track. We're on track with the four-year fiscal plan that we laid out last fall with Budget 2019. We continue to make job creation and economic growth the #1 priority in our plan going forward. And we continue also to commit to Albertans that we will manage the province's finances responsibly. I need to talk a little bit again about the volatility that we're seeing out there in the marketplace today. It's significant. And right now, quite frankly, it's quite unpredictable. And again, it really focuses us on what we can do. Today, we should be managing what we can manage. We need to ensure we have the most competitive business environment. We need to ensure that we're delivering maximum value to Alberta taxpayers and ensuring that we're managing our finances responsibly. I do want to leave on this note, though. I am optimistic. I believe that 2020 has the potential to be a turnaround year for the economy in this province. We're seeing signals, we're seeing signs at this point that our broad-based method of improving the Alberta economy is beginning to attract investment. Again, CAP's indicating that investment in this province will go up from an energy standpoint by $1.5 billion. We're seeing other prospective investment coming into the province. Again, we're expecting to lead the country, in fact, or at least the other large provinces on non-energy investment in the upcoming year. So I'm hopeful and I'm expectant and I'm confident that the policies we've implemented and are continuing to implement will in fact attract investment into this province, create long-term opportunity for Albertans in the future. So with that, I'll take any questions you might have.
Pardon me. Good afternoon, Minister. For years, we've heard about the importance of getting these 2 out of 3 of the major pipeline projects completed. You touched on this a bit and said, you don't want to celebrate until it's done. But since the last budget just a few months ago, we've seen TMX construction restart, Line 3 progress. How much more confidence or optimism do you think there is now that you're going to see those 2 out of 3 pipeline projects done?
Well, as I mentioned, I'm more hopeful now than I've been for many, many months. We've seen some court decisions that have clearly fallen in the favor of Alberta, in favor of the energy industry. I'm quite hopeful that Enbridge Line 3 is going to move forward. And again, very pleased that TMX is moving forward. One thing, as I have conversations with my federal counterpart, I make it clear, we're going to need to see that the rule of law is enforced when there are illegal protests and blockages on TMX construction. But we're pleased that it's moving forward at this point. And again, we're pleased that TC Energy is talking about getting KXL going forward again.
As a follow-up, in your jobs plan, you talk about reducing unemployment. What's the number from what benchmark? How many jobs do you expect this plan to create, and by when?
Well, listen, our goal is to ensure that every Albertan ultimately has a good job to go to at the end of the day. Our projection is that we will see full employment by 2022-23. That's our expectation. Full employment would be measured in approximately a 5% unemployment rate in this province. And so again, we're going to do all we can to ensure that that jobs are created, good long-term sustainable jobs are created in the province.
Hi, Minister. Thanks for taking my question. The deficit this year stands at $6.8 billion. That's almost $1 billion higher than was forecast just 4 months ago for this year. You spoke of volatility. How are you still so confident that the numbers aren't going to continue to struggle over the next couple of years then?
Well, now when you say this year, you're talking about the 2020 projection.
Yes, it's higher.
You're sure. It's higher than what we projected in budget 2019, but the current year results, the Q3 report, is favorable by $1.2 billion. And so those are actual forecasts in terms of what we're expecting by March 31st. That's very positive. As we take a look at the 2020 year, the upcoming budget year that starts April 1st, we're showing revenues remaining flat. And again, we recognize that oil royalties are going to be, we believe they're going to be lower because of a wider differential. And in fact, oil royalties we're projecting to stay below our current year expectations until the last year of our forecast. So as we take a look at all of this volatility right now in the global economy, I can't predict exactly what that's going to look like, but what we have to do, we have to make best case revenue projections based on sound, credible economic assumptions for the 4-year plan. I believe that's what we based this budget on. I mean, let's face it, early January we had oil north of $60, and we didn't quickly move our revenue projections based on those current fundamentals. Today we're seeing real challenge in WTI prices, again, based on global fears. We need to take a defensible, credible approach that we believe will stand us in good stead for 4 years. That's what we've done.
So then I want to ask about the economic projections. The province is projecting 2.5, which is higher than even the most optimistic private sector forecast. So when you're saying you're credible and being cautious, how do you marry that with the higher than the projected forecast in the private sector?
Sure, and that's a good question. We are predicting real GDP to be 2.5% this year. And I want to just provide two factors that play into that. Population growth, we're projecting to be over 1.5%. That plays into GDP. On top of that, with the extra energy production that we're expecting this year, which is going to be more than 170,000 barrels a day, that alone results in real GDP growth of 1.5%. Those two factors alone are quite compelling. But, revenue projections have a much stronger correlation to nominal GDP. When it comes to our nominal GDP projections, we're right in the middle of the mix. And so we're confident in the revenue projections we put out.
Hi, Minister. How sustainable is it for schools to go into their own budgets with this own source funding, things like vending machines and school rentals, facility rentals, to prop up the operations of the schooling? You mentioned that you're not doing any cuts, but you're increasingly relying on these school boards.
Well, I would suggest we're not increasingly relying on them. Our provincial funding will be maintained. We're not reducing our provincial funding and then expecting own source revenue to make up the difference. Our provincial funding remains intact. It will not be less than. Now, we do expect that school boards will be, in fact, we're expecting that school boards will spend down their reserves between now and the end of August, and that's projected in our 4-year fiscal plan. And in the 2 out years, we're projecting that school boards will be raising some additional own source revenue, but that is not offsetting any provincial funding to those school boards.
Minister, just wanted to ask about the capital plan. Looking at year over year, I think it's up 6% this year. How important is that on the jobs? How many jobs do you think this could create? And how much of that is sort of a form of a bit of a stimulus package? Is that part of the thinking there?
Sure, and it is. I don't, right off the top, I can't definitively give you a total number of jobs relative to the capital plan, other than to say it's in the thousands of jobs. And we have moved forward, again, a few key projects that were in the out years, both to create extra economic activity now, which leads to jobs, but as importantly, and maybe more importantly, debottleneck debottleneck aspects of our economy that were holding back investment. And so that's been intentional. Now, in terms of the significant, what seems like a fairly significant increase, there were some projects that actually didn't get built, or where activity didn't occur in the year that we're currently in. So a couple of those projects have just been moved into the next budget year. So that's at play as well.
So just to clarify on that real briefly, it was the intent to have it go up 6% a little bit to even be a bit of a stimulus, or was it just to try to catch up on some of those other ones?
Well, a combination. There was a few projects that were moved from the current year into next year. But again, as I've mentioned, we are moving a few key projects up as stimulus. Again, not only to create jobs on the build, but to create long-term private sector jobs with added investment.
Actually, I just want to say, sorry, I see you, Emma. After Emma, we're going to jump to the phone, so not too quick back there.
She's right here.
I couldn't see it. It's like a disembowel. Oh, hey. G'day, Minister. Quick question here about oil sector. You've talked about the volatility in it, but it seems as though you guys are really banking on that to have some kind of economic stimulus here, or economic kind of bounce back. Are you relying too much on oil, and if not, why?
I don't believe we are relying too much on oil. I mean, it's no secret. The energy industry makes a great contribution to this province's economy and to the revenues of the province. And so we need to understand where revenues are going to be. We need to understand where energy investment is going to be, as well as energy production. When you take a look at our revenue lines, line by line, on the resource sector, I think you would agree with me that, again, oil royalties are not exceeding the current year we're in until year 4. It is, they actually drop because of what we believe will be a wider differential, and then increase in the out years. We know that there is increasing capacity and production coming on. We are planning, in terms of additional egress, we are planning that Enbridge will complete Line 3. We're predicting Q1 of 2021. The industry is actually predicting that to be done in 2020. And our budget does include one of either KXL or TMX being completed in the 4th quarter of 2022. So quite frankly, that project is not going to impact the fiscal plan materially, because it's right at the tail end. What we haven't actually fully factored into these revenue projections is the increasing egress from our existing midstream players and existing pipelines. And so, when I talk to economists within the department, they will tell me there's a lot more upside potential in this forecast than downside. But at some point, we have to determine what's a credible forecast to base our budget on. That's what we've done.
And there are a couple of instances in this budget where you're doing what I've never seen a provincial government do, which is basically just take aim at the federal government, a different level of government, and say, screw you guys, we hate what you do, and here's a whole chapter 15 pages long about why we hate you. Why are you doing that?
I think that language is a little bit strong.
I'm paraphrasing.
Well, listen. We share the frustration of so many Albertans when we've been a province who's made an absolute outsized contribution to Confederation, and then we see a federal government implement policies that are absolutely contrary to the economic interests and to the interests of Albertans, and I would suggest the interest of Canadians. That's why we've devoted a chapter to it.
Thanks.
And now we'll go to the phones, please.
Hello, Rick Bell from Calgary Sun.
Hey, Rick.
Hi. For any surviving fiscal hawks in the room, why did you decide not to reduce spending more than you did? Why did you settle on the number you settled on rather than cut deeper?
Well, listen, Rick, I would have had a lot easier summer had we just decided to go with 15% across the board and gone home. Quite frankly, that would have created additional hardship for Albertans that we wanted to avoid if at all possible. And that's why we took an awful lot of time over the summer and fall, and in fact have reevaluated our plan now to really bring a surgical approach to spending reduction in this province. And again, I've been very clear, and I'll say it again. If we do encounter broad economic global conditions that are outside of our control, that erode our revenue projections, additional fiscal restraint will be required. But we committed to Albertans during the campaign, Rick, that we were going to balance the budget by holding spending flat and grow the economy. When we took office, we recognized that we would actually have to turn spending down, but we honored our commitment of not reducing spending in health and education. And in fact, we broadened that out to the social services ministries. And so, in fact, from a spending restraint standpoint, we're going a bit further than we did, than we suggested we would have to Albertans in our campaign. But we did make a commitment to balance. And so we believe that we have the most thoughtful plan to get to balance, a plan that will, in fact, ensure Albertans continue to receive high-quality services during the next 4 years.
And just a supplementary question is, what would you say to people, and I think there are a few here in the room in Calgary, who might think that your forecast for the future, your crystal ball, is a bit rosier perhaps than some of ours, and that you're relying too much on a very nice picture which may not come true?
Well, listen, hindsight's going to be 20/20, but as I look ahead, and again, when I evaluate every one of those revenue lines and take a look at our underlying assumptions that have informed our revenue projections, I don't believe we're being over-optimistic. In fact, I believe we're taking a cautious but credible approach. Now, hear me say this. We are fully prepared to adjust this budget and the spending in this budget should we encounter additional revenue difficulties. But again, if you take a look at our revenue projections line by line, there is not one line that stands out as an outlier. We're predicting that WTI prices will, not this year, but next year, start to move up into the very low 60s. We're also predicting that our differential will widen, and those are largely offsetting fundamentals. We're projecting the differential will widen to over $19 this year and then to over $20 next year, only narrowing in year 4 to $16 after we've seen additional pipeline access come on. In the current year that we're in, we're projecting a differential of around just over $14. So again, I think when you take a look at our underlying assumptions, I think you would agree with me that they're not overly optimistic. I believe they're cautious but credible.
Hi, this is Kelly Kreiderman from the Globe and Mail. I'm just following on Rick's question. How much has coronavirus thrown your predictions and your forecast for a loop? We're going to see a absolute drop in global oil consumption this quarter due to fallout from the virus. How much have you had to change your forecast in the recent days and weeks as we get to know that this is going to have a global effect?
Well, we finalized our Q3 forecast here a couple of weeks ago. And the coronavirus has been, as you know, extremely dynamic, even in the last few days. What I can tell you this, our Q3 forecast for the current year were put together with some caution, with a cautious approach. But I can't predict exactly what's going to happen within the next few weeks. And so there could be some effect on our Q3 projections, depending on how the global economy and commodity prices play out. But what I can say, I can confidently say that our general assertion that we're going to come in well under the deficit amount that we predicted in budget 2019, I can say with confidence that I really believe that will be the outcome of the current year that we're in.
And can you give us any clarity on where your talks with Ottawa about getting that $2.4 billion from the fiscal stabilization fund, where they're at? Because do you have any idea when the federal government might make a decision on that?
Well, the answer is no. I don't have a definitive idea when they're going to make a decision on that. We've suggested this. We've heard from our Prime Minister soothing words about his concern for the West and concern for national unity. And we've followed up and said, listen, we appreciate those words, but Albertans need to see tangible action. To date, we've seen nothing.
Hi, Minister. Chris Varco with the Calgary Herald. Your budget is forecasting unemployment rate falling to about 6% next year and then down to, I think you call it full employment by 2023. But yet all the private sector forecasts are much more cautious than you are. I think they're at about 6.7% unemployment in 2021 and still at 6.8% 2 years later. Why aren't your numbers overly optimistic given where all the other forecasts are?
Well, again, I believe our numbers are credible based on what we see here on the ground in terms of indication of an additional investment coming to the province. Our department, quite frankly, has a very strong track record of not only revenue projection success, but also employment projection success. And again, based on what we're seeing here on the ground in the province, some signals around additional investment coming on stream, we're confident that we will see a gradual reduction in unemployment. And let's face it, we're not predicting this thing to go down to 3%. We're predicting it to move down by really less than 2% over the course of the next 3 years. We believe that we will see additional investment to get that done.
The other thing is we're talking about oil prices today are at least $10 below what your average forecast is for the year. And you're talking about the risks of coronavirus. And I'm just wondering, how are you actually budgeting or accounting for those risks?
Well, listen, in early January, we had WTI prices significantly in excess of where our projections are. You know, which day do we want to pick the day to cast projections? Ultimately, we can't predict where the coronavirus and the economic effects will end, quite frankly. But what we can do is we can manage the variables that this province can manage. And that's why we continue to believe it's vitally important that we create the most competitive business environment to attract investment and ensure that we're spending responsibly and that we're showing restraint in our spending. Those are the two things we can manage. Again, you know, we're building a 3-year fiscal plan in Budget 2020. And so we know that there will be revenue volatility. We know there will be events, and I expect that we'll see commodity prices on both sides of our assumptions. But at the end of the day, we have to take what we believe is a credible but cautious approach. I believe we've done that in this budget.
We're going to come back to the room now for some more questions here.
Minister Toews, thank you for taking my question. My question is, your government's deficit is $100 million more than the last NDP budget, and spending is only being rolled back at 3%. How does this all square with the criticism leveled at that last NDP government by Conservatives, specifically when they're campaigning? If we look outside of the tax cuts and a few allocated line items, revenue and expenses look a lot like that 2018 NDP budget.
Well, it's interesting. We would suggest, in fact, I think you would find it clear if you spend time in this budget that our fiscal plan is very different than the previous government fiscal plan. Firstly, in the year that we're in, we offloaded the crude by rail liabilities, quite frankly, that we inherited from the previous government. We put a provision in Budget 2019 of $1.5 billion. We've actually offloaded those contracts for something just less than $1.3 billion. And so that's a fiscal reality that Albertans had to deal with in the current year, and that's had a big impact in our results. We do have a schedule in our fiscal plan which basically shows the trajectory of both the previous government's fiscal plan and our fiscal plan based on our current revenue predictions. We end up with an accumulated debt differential of $16.2 billion at the end of the fiscal period. That's very significant. For every $1 billion of debt, Albertans pay approximately $30 million in debt service costs. So we do end up at a very different place.
I want to follow up to a question that was asked previously about your demand for the $2.4 billion retroactive fiscal stabilization payment from the feds. I appreciate the strong language demanding, but what is the or else? What happens if the feds say no?
Well, I mean, quite frankly, we have a fair deal panel that is taking a look at a number of initiatives that may be in the best interest of the province to implement. And we'll be evaluating our response on all of those fair deal panel items. We've also, and the Premier's been clear about this, if we do not see Alberta's interests considered going forward, we will have a referendum on equalization in October of 2021. Those are things that we will tangibly do to look after the best interests of Albertans. Now, with respect to the fiscal stabilization ask, we're making a very credible, defensible ask here, and that ask has been supported by all 10 provinces. Saskatchewan has a vested interest. Newfoundland have a vested interest in this cap lift as well. And so, again, we're looking forward to a response from the federal government.
Thanks.
Sorry. Thank you, Minister. You spoke earlier about the comparison of other provinces' spending levels to ours, that we spend more than others. Historically, Albertans would have said, darn right, we have the strongest economy, and we still do have the highest GDP per capita. We have the best wages. We are used to having the best services and the lowest taxes. To what extent do you think Albertans are accepting of no longer aspiring for the very best, richest services in the country?
Listen, I think it's in all of our best interest of Albertans to ensure that we have the best services possible. But the McKinnon panel report recommendations and conclusions were clear, and that is Alberta is spending $10.4 billion more per capita relative to the other large provinces in the country, and we're not getting better results. And the other fact that plays in is that Alberta is no longer the highest cost jurisdiction to live in anymore. In fact, it's lower than many regions in many parts of the nation. And so we can no longer afford to be an outlier in terms of the way we spend money. And our budget 2019 and certainly budget 2020, over time we will bring our per capita spending down to be in line, relatively in line with the other large provinces.
There was something else in addition to the Fair Deal chapter in this budget. There's another page that I've not seen before in 15 years of covering these budgets. It's the who pays the taxes, and it highlighted the fact that an outsized proportion of our taxes are paid by the top decile, the top 10% of the population. And I'm curious as to why you put that in. Do you feel that the top 10% in this province pays more than its due share of taxation?
Listen, that schedule was put in there for information purposes. I think it's good for all of us as Albertans to know who's basically bearing the load in terms of tax burden in this province. That was simply put in there for information for Albertans.
Thank you.
Hi, I wanted to ask about Teck pulling out of the Frontier Mine project. Obviously, that was supposed to come with thousands of jobs that are no longer going to be there, but you still remain optimistic in terms of job growth and job creation, and this is sort of you call the budget a blueprint for job growth. So I'm just wondering, how do you maintain your optimism, and what do you say to people who may be worried that that's part of the beginning of a trend of companies maybe not wanting to do business in Alberta?
Sure. Well, we were deeply disappointed that Teck pulled back their application. Not entirely surprised, but deeply disappointed that they pulled back their application. And it will have an effect, I believe. Not the Teck pulling back their application, but the fact that we have a federal government who didn't categorically affirm its support for a project that's gone through every environmental hurdle put in front of it and excelled going through all of those hurdles. The fact that the goalposts were seemingly potentially to be adjusted at the last minute has a profound effect on investment, not only in the energy industry, not only in the province of Alberta, but I believe across the nation. So we were very disappointed in the way that whole decision played out. But I want to say this. Our fiscal plan does not have any direct impact or was not dependent on the Teck investment, on the Frontier Mine. It really fell outside of the four-year plan. And in terms of revenue projections, for sure, we know that there are a number of brownfield investment opportunities, approved projects already. There's additional capacity that existing players can turn on, and those are the production increases that we included and incorporated into Budget 2020.
Thank you.
Hello, my question is about the vaping tax. Can you talk about why you've chosen this method, and do you think this is the best way to curb teen vaping?
Well, we basically, again, taken a flat across-the-board 20% ad valorem approach on taxation with vaping. And I can say this, that we know that purchasing elasticity or purchasing sensitivity on price increases is felt most by young people. And really our move to tax vaping products is around public safety. I can't predict that this tax rate will stay where it is forever. We'll be evaluating purchasing patterns going forward. but we really believed it was in the best interest of Albertans and in the best interest of public safety as a whole, particularly for our youth, to implement a tax and actually see the cost of those products rise.
Yes, and do you think this is the best way to curb teen vaping through this tax?
Well, it's certainly one way, and it was a method at our disposal, and so that's why we implemented it. Again, it was about protecting our youth. It was about public safety, and ensuring that there was additional disincentive to be utilizing these products.
We have one more caller on the line, so I think we'll go back to the phones for that last question there.
Hi, Minister. It's Gary Mason from the Globe and Mail. You've used the word volatility many times. You've talked about the risks to your projections. I'm just wondering why you have not built any kind of revenue forecast allowance into the upcoming fiscal plan for this upcoming fiscal year. The next year, I guess in 2 years, you have some money built in, but that seems to be a standard line item in most provincial budgets, and especially in a province that relies on oil, and which is such a volatile commodity. Why do you have no revenue allowance forecast in this budget?
Well, we do, as you pointed out, we do have a revenue forecast allowance in year 4, in the year that we achieve balance. We also have a contingency amount of $750 million built into our budget every year as well. Now, historically, we've seen costs of disasters, while they can absolutely vary in this province, we've seen an average cost in the neighborhood of that $400 million, and again, it can really vary. So we believe that with a $750 million contingency amount, we're being responsible with respect to current year budgeting. When we do get to a balanced budget, that's where I really believe a revenue forecast allowance becomes even more important at the time that we're where we're within balance. Let's face it, at this point in time, we're looking to reduce our debt as quickly as possible. When we get to a balanced budget at that point in time, to ensure we don't go back into deficit spending, that's where a revenue forecast allowance, I think, provides the most value.
But the contingency allowance that you're talking about, generally speaking, historically, has been for things like you mentioned, for forest fires and natural disasters that aren't budgeted for. Revenue forecast overruns generally come out of a revenue forecast allowance fund. In this case, without one, I guess any kind of volatility that hits your revenue projections is simply going to add to your deficit. Is that right?
Well, any downward volatility will affect our net results, absolutely. And as I've been clear, again, if we see a fundamental change in our revenue projections due to outside economic factors, we will adjust our budget. Additional spending restraint will be required.
Go ahead.
About advanced education. In the last budget, operational grants were cut by 5%. That led to some tuition increases in the province. This budget, we're seeing a reduction of 6%. Are you worried that post-secondary education might become unaffordable for students?
Well, listen, we need transformation certainly in the cost of delivering advanced education in this province. The McKinnon panel pointed out that it costs $36,500 per full-time learning equivalent in Alberta. That was over $10,000 more than the average of Ontario, British Columbia, and Quebec. And so we need to work together with our excellent world-class post-secondary institutions to bring that cost curve down. So Campus Alberta grants will be declining. At the same time, we're also, through regulatory means, freeing up our post-secondary institutions to be entrepreneurial and to raise additional own source revenue. I know of institutions that have had opportunity but have not had the means to do that in the past. And so we're going to free them up to do that. And where it makes sense, they will be able to raise additional revenue. And at the end of the day, at the end of our 4-year fiscal plan, provincial government support per FLE will be higher, even at that point in time, relative to the other comparator provinces.
And when it comes to K-12, you mentioned that provincial funding is going to be maintained. Does that take into consideration student enrollment increases? And if so, who's funding that? Is that going to come out of their own source from the school boards?
Well, listen, we've committed that we would not cut or reduce education funding. We're maintaining funding. Education costs in this province have risen to the tune of 80% in the last number of years, while CPI and enrollment growth have only gone up about 50%. So we know that we can deliver in a more efficient manner. So that's why the education minister came up with a new funding formula, a new funding model that will ensure that maximum resources get into the classroom on the front lines. That's ultimately how we're going to deal with enrollment growth going forward.
Thank you.
I just want to flag we probably only have time for 2 more questions. Apologies if there's more waiting. I can't see the line, but we have to keep the minister moving today.
Hi, my question is about the Alberta Surgical Initiative. How will it increase the healthcare system's efficiency, and what do you say to the people who say it's a move towards more privatization?
Listen, I would say to those people, this is a move towards delivering more cost effectively to Albertans. This is a move to increase the efficiency of delivering healthcare, publicly funded healthcare to Albertans. There's certainly a good example in Saskatchewan when they had excessively long wait times for surgeries, and they implemented a similar model where they utilized private clinics, independent providers for specific surgical procedures, and they drastically reduced their wait times, and they actually performed those surgeries for about 26% less cost than the general system. So that's the reason why we're wanting to implement the surgical initiative. Our goal is to actually reduce the surgical backlog by about 80,000 surgeries over the next 3 years. That's an ambitious plan. We won't get there by just staying with status quo. We absolutely have to look at making some fundamental changes to improving our efficiency.
Thank you.
The Premier talked this week about potentially investing in oil sands. If companies have a hard time getting partners, whatever, that you might step forward. Is there anything in the budget that would reflect that as a potential possibility?
Listen, this budget 2020, includes all of the definitive decisions that have been made on behalf of the Alberta government. So at this point in time, there's been no definitive decisions around any additional investment in the energy industry, and so this budget isn't reflecting that.
Right. So what might that do to your budget this year? If later this year the Premier comes out and announces something in terms of an investment in oil sands, might that cause a major issue for your budget?
Well, in terms of additional investments, those would be evaluated on their merit, obviously, at the time of decision, and ultimately, if the Alberta government would end up purchasing some type of asset or making an investment in the energy industry, we would make the decision at that time based on its merits, and it would be an asset. It wouldn't be a direct expense, obviously, and so I would not see it directly impairing or affecting the net fiscal outcome of the current year.
Thanks, everyone.